What's up, guys? Stas here. So another roller coaster ride in the stock market today. S&P 500 is currently up 30 points, up about 1%. The Dow Jones is up 390 points, up 1.56%. The Nasdaq's up 55 points, up about 0.6%, with the small cap index, the Russell 2000, being up about 1.6%, up $21. And in this video, we're going to talk more about the markets, breaking down some technicals, and I also want to share with you guys whether or not the stock market's going lower. Again, we're going to break down some technicals and talk about some different scenarios here and go over how to actually make money when the stock market's going down. I have a couple of ETF picks here, and we'll also go over a bunch of other stocks that I'm looking to trade heading into next week in the stock market. So if you guys enjoy the content, as always, hit that like button, consider subscribing to the channel, check out the Discord chat and the Facebook group down below if you want to be further connected with the Strive Smart community. And you can also get 2 free stocks from Webull valued up to $1,400 if you deposit $100 into the platform, and all those links are free of charge. So let's get right into it, guys. Going back to the S&P, and despite us having a green day with about 45 minutes left, it seems like we are going to have a green day today. The bears still won the day, right? And let me explain why. We can see clearly here on the 5-day 5-minute chart that the markets, the S&P, took out the lows from yesterday. So right off the bat, that means the bears are an advantage, right? Because we took out the lows. If you see yesterday, we were at 30.30. We broke that. We pretty much broke every support yesterday, right? 31.20, 30.70. We broke 30.20, and we ended up closing at 3,000. So for the bears to have lost the day, right? So let's say the bulls won the day. The ideal scenario for the bulls would have been, okay, a double bottom at 3,000 and then a break up into the 3,100 territory heading into the weekend. But the fact that we didn't get that, we took out the lows here at 3,000. We're at 29.84, and ultimately the uptrend, or the downtrend rather, is still intact here on the S&P, because on the intraday chart, you guys can see we're making lower lows. And at this point right here, it's a pretty critical point. We're at a lower high, right? So in the next 45 minutes, we'll see here what happens. And obviously, as you guys are watching this, the market already closed, so you can come back and see what happened. But we're going to see, is the market going to close on an upswing here, which could definitely happen. We've seen massive, mysterious rallies on Fridays before heading into the close, right? Where I'm talking about literally in the last 15 minutes of the market, it just shoots up 1-2% like crazy. And that's maybe some Fed manipulation, maybe, who knows? But we'll see, guys. If it swings up here and starts to push 30.70, that'd be very good for the bulls heading into the weekend, quite honestly, right? But if we end up seeing a downwards push here and potentially a shoot to maybe 29.80 again, a lower low push right now in the next 40 minutes, that would obviously be good for the bears, right? And pulling back to this hourly chart, you guys can see we are still at a lower high here. So overall, again, the bears are in charge heading into the weekend, although there are different couple of, of scenarios that could end up happening over the next 40 minutes here in the market. But overall, I'm watching mostly this 5-day 15-minute chart. I'm really liking this time frame here. You guys can see that 50 SMA is completely a resistance right now for the S&P. So watch for that break up. Again, that'd be very bullish and very good for the bulls. But ultimately, at this point, the bears are in charge heading into the weekend, guys. And when it comes to the Dow Jones, very similar, right? 5-day 15-minute chart, that 50 SMA is a stone cold resistance. We're at a lower high right now, and we took out the lows on the Nasdaq from yesterday, right? If you guys saw yesterday, the Nasdaq was at about 25K, and mind you, we didn't take out the lows as aggressively as we did on the S&P, but very, very minimally there, it did take out the lows, hitting at about 25,078. So this looks more of a support, quite honestly, on the Dow Jones. So for next week, I'd watch and see. If I'm a bear in this market, I'm looking to see, okay, is the Dow going to break 25,000? That's pretty critical. And if it does, I'd expect a lot more downside at that point. But overall, going back to that 5-day 5-minute, you can see, yeah, we are holding that 25K as a support, but we're also downtrending. So we're actually squeezing at this point into a wedge where we're going to pick a direction, either either up or down, and that's kind of what I'm looking for over these next couple of days here. And if we're talking about overall price targets on the Dow, we're looking at next support being around 24,800, as we can see here on the 4-hour chart. And back to that S&P, I didn't cover it on the S&P. We're looking at 2980, followed by 2950, followed by 2900. So these are a couple of upcoming levels on the markets that I'm watching for this upcoming week if we're looking at technicals. And the NASDAQ today, it's actually up 0.25%. This thing might actually go red over these next 40 minutes. Who knows? But it's currently up 26 points. We saw a massive pull down from about 10,100 down to about the big resistance, older resistance, now support at 9,500. So this is very critical for the bulls, guys. I'm telling you, right? Over the past couple of weeks, ever since the markets have recovered, the NASDAQ's been holding that 50 SMA, that green line here, like clockwork on the 4-hour chart. So I'm expecting if it breaks, that could be bad to the point where we might fill down to 92.50. We might fill down to 8,900. These are some upcoming levels of support. And overall, guys, I'm not against that, to be honest. This market's a bit overheated, and it's kind of due for a pull down, right? So if we do end up breaking 9,500, 9,200 here, heck, we might go to 8,800, and that could be a nice level of support on the 180 SMA to the point where, yeah, we might actually continue the uptrend from there after a nice, healthy pull down. Everybody out there freaks out. Not everybody, but whenever the markets see a big red day, everybody's like, holy crap, the world is over. But the truth is, after it's ran up so much, you have to expect a red day. It's healthy, right? And now just watch those levels that we talked about across the indexes here on the downside. And yeah, if we break those next week, we're going to be heading lower. And ultimately, it seems like we are heading lower as, again, we took out the lows from yesterday in both the NASDAQ and the S&P. So that's really not good for the bulls here in the short term by any stretch of the imagination. So let me know down below in the comments, guys, what are your thoughts, as always, on the markets? I would love to know. And as for what I personally did in the markets today, I didn't do anything, right? I had a pretty good earlier week here. Took a couple losses this week. It's okay, right? But I didn't want to force anything heading into this weekend, right? And like I've been saying on the channel all the time, right, I've kind of been preaching. I try not to preach, guys. I don't want to be that guy that's preachy, but I've been saying that I'm being patient. Markets have been overheated, in my opinion. I've been stacking up cash, having more cash on the sidelines, waiting for something like this drop. And now that we're getting this drop, I don't want to just jump in gun-ho, guns blazing, right? I kind of want to still be patient and see, if we come back a bit lower. Because like I said in yesterday's video, the worst thing you can do is once the markets come down, unload your whole cash balance and watch the markets go down even lower. That's the worst position to be in. When the markets go down even lower, you don't have more cash to jump in because you unloaded it on the first market drop. That's not where you want to be, guys. And that's kind of the approach I'm taking here from a swing trading perspective, right? And when it comes to long-term investing, very similar. I'm not looking to take the cash right now that I have and just dump it all in the markets because we dropped a little bit. I am meticulously adding, a little bit here, a little bit there, but yeah, I'm just being patient, guys. That's the name of the game for me, and I didn't really make any moves today. That's just the honest truth, but I'd love to know if you guys made any moves. Let me know down below in the comments. Now, how can you actually make money? Let's say this market does continue to push down to those downside targets. How can you actually make money? Well, there's 3 ETFs we're going to talk about in this video, and first and foremost, these are not meant to be held long term. A lot of people get caught bag holding these, meaning they get into it, it drops, they hold it hoping it goes back up, but then ultimately they never sell it because they're always hoping it's going to go back up. That is a position you do not want to be with these, right? Because the goal with these ETFs, I'm going to share with you all, and many of you guys have been watching me, you know these already, but the goal with these is to take advantage of the market volatility and hop in and out. They're day trading tools, guys. And read the prospectus, as always, on all ETFs. They tell you exactly what they're about. So the first one here is going to be SQQQ, right? This is an ETF that goes up. It's a 3x leveraged ETF that goes up whenever the NASDAQ is selling off, right? So remember we talked about the NASDAQ, right? If this thing does not hold 9,500, which it seems like it's not, if we fill the gap down to 9,200 and maybe down to that 8,800 price target we talked about, that's a drop of about 8% from where we are right now. So if we do some basic math, okay, SQQQ, it's a 3x leveraged ETF. It goes up whenever the NASDAQ's going down. So let's say the NASDAQ again goes down 8%. Okay, basic math, 8 times 3, this will roughly go up 24%, right? Roughly. That's kind of how the math works here if that move were to be made in a very quick period of time. If that move was made over a span of a couple weeks, it'll be different because these ETFs have decay. It's not going to be 24%. That's a whole different story. But if that move is made very quickly and intraday, the idea is it's 3x. It's going up whatever the NASDAQ's going down at a 3x rate. So SQQQ, I'm watching this one like a hawk just in case the NASDAQ does take that dump. And another one is SPXS, which is the same thing as SQQQ, but the only difference is it trades based upon the S&P, right? So let's say the S&P 500, it's having a bad day. It's going down about 3%. Whatever, let's say yesterday when it was down 5-6%, SPXS is going to be up 15% to 20%. And the goal as a day, now, I'm not a day trader. You guys know that. I'm mostly a swing trader, but I do day trade in volatile times like this. And the goal as a day trader, looking to day trade these ETFs here, right, is to hop in and out very quickly to gain maybe not all that 15 to 20% profit, but to gain some of it, right? 2, 3%, 5%. That is the goal. And the goal is not to get too greedy with these because you could end up being that dude that's holding the bag or that girl that's holding the bag, right? Like I talked about earlier, and you're hoping it's going back up. That is not the place that you want to be. And another one here is TZA. This is a direction ETF. It's a small cap bear ETF. And this is very similar to the other two, but it tracks the Russell 2000. And we know the Russell 2000 swings a lot more. It's more volatile than the S&P and the Dow. The NASDAQ could be as volatile sometimes, but it's more volatile than the NASDAQ as well if we're just looking at charts here. And TZA could be a very good opportunity to play the potential downside here that the Russell has, right? If we break this overall downtrend, if we get a second wave of CV, God forbid, right? If we get a second wave, it hurts more small businesses even further. I know it's bad profiting off of downside, but in people's lives and the economy in general. But if we're just strictly looking at it with no emotions, monetary only here, if we're looking at just trying to make some money, right? No emotions involved, that would make sense. Russell breaks the trend. You know, we could end up making some money on TZA. And another one here, and mind you guys, all of these, they have inverses. So if the opposite happens, you could end up trading, instead of TZA, TNA, which goes up whenever the Russell's going up at a 3x rate, you know, you can trade TQQQ, which goes up whenever the NASDAQ's going up at a 3x rate, and SPXL goes up whenever the S&P's going up at a 3x rate. So the beauty of these is you can make money when the market's going down and when the market's going up because they're inverses, they're pairs, right? So let's go over now a couple of other stocks very quickly. There's just 3 here I have on my list, guys, to go over that didn't do too bad from last time that I checked them. The first one here is Facebook. I'm liking Facebook because it's actually green today, up about 0.6%, up $1.30 as the markets, they're still a bit green, the markets, but they're kind of volatile. So Facebook's holding up pretty well here, up 0.6%. And honestly, I'm liking the way that it's holding $225 per share. That's the level that I've been watching as a pretty critical support, right? And I've been talking about it on these videos. But quite honestly, with the markets looking like the bears are in charge, again, like we talked about earlier, we might get a lower price target here on Facebook. We might get a lower price to the point where it could go to, let's say, 215 to 220, which quite honestly, I'm more in favor for that to happen. So if we get to 215, guys, to 220, and maybe we go back up even to the 220s, mid 220s, 230s, that could be a potential of about 5 to 7% if we were to swing trade something here like a Facebook, right? Ticker symbol FB. Another one that's holding up decently, and I've been talking about this one a lot, is NIO. It's currently up 3%. This is the Chinese electric vehicle company. It's up 18 cents here, and we're trading above $6, guys, and it's looking like we're going to close above $6 as well. That's very good for the bulls. You guys can see yesterday we pulled down 550. We held it at a higher low. We held that 50 SMA on the 4-hour chart. That is fantastic. And now we're actually seeing on the 5-day, 5-minute that we're breaking out of the major resistances here, being the 180 and the 50 SMA. So this is a very good sign overall for NIO heading into the weekend. So for next week, I'm looking to see what it does at 620. 630, as those are two key levels where NIO did fail over the past couple of days here. And the last one we're going to talk about, actually there's one ETF I want to mention at the end. Nike here, it's up 0.6% today, up about 56 cents. We've talked about how $95 to about $92 is a buy range here for Nike, at least in my opinion, short-term swing trading, right? But one thing is, I didn't buy it, right? I didn't buy it quite yet because I'm waiting to see what happens on Monday and Tuesday, like I said in last week's, earlier in this video, and like I've been saying in recent videos, I'm being patient, right? And they also have an earnings report coming up here in about 2 weeks, so that's going to be interesting as well. And ultimately, for Nike, it seems like, again, 95's holding, but we are seeing resistance on the 50 SMA, 180 SMA on the 5-day, 5-minute. So I'm not looking to jump in quite yet until we get that momentum upwards back into, let's say, 96.7. We'll see what ends up happening there. And again, I'm not opposed to buying shares at $92 either. So overall, guys, those are just a couple of stocks I'm watching, some ETFs that I'm looking to trade here on market volatility, and just some thoughts on the markets in general. And as always, I'd love to know down below in the comments your thoughts on the market. If you enjoyed the video, hit that like button. Let's try to get 250 likes on this video. And again, if you want 2 free stocks valued up to $1,400, check out the link down below in the description box. All you have to do is put in $100 into the account and you get those 2 free stocks. So I'll catch you all in the next video, which is coming out tomorrow. 2 dividend stocks that I'm buying right now. There's a video on that coming. So subscribe if you haven't already. Be safe out there as always, guys. Peace out.